Good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Tuesday, September 18th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at Dan Russo _CMT. PowerFeed TV brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can sign up to receive Chaikin PowerFeed for free over at www.chaikinanalytics.com/PowerFeed-TV. U.S. equities were mostly lower in Monday's trading, with technology and consumer discretionary as the biggest laggards, while the defensives were leadership, led by REITs and consumer staples. Treasuries were mixed. The dollar was weaker against the major currencies, most notably sterling and the euro. Gold finished up about 40 basis points, and WTI crude settled down 10 basis points. Outperforming sectors, as I said, REITs, staples, and utilities. Tech and discretionary were the big underperformers. And as we get to the desk this morning, S&P futures are up 20 basis points. Asian markets were higher overnight, with China up 1.8%. Think about that for a second. China up 1.8% after President Trump announced tariffs on $200 billion worth of Chinese imports. European markets are posting solid gains as well. Treasuries are little changed. The 10-year yield trading right around 3% after hitting 5 months highs yesterday. The dollar is firmer on the major crosses. Gold is off 20 basis points, and oil has added a little over 1%. And as we look at the markets, you can see we were pulling back from resistance yesterday, starting to carve out that resistance zone a little bit more definitively in the 2,900 to 2,920 area. Support still comes into play at the standby levels that we've had for a little while here now, 2,873, 2,800, and your rising 200-day moving average is at 2,744. RSI remains in bullish ranges, and the Chaikin money flow indicator remains bullish. So not a ton has changed here from the perspective of the strategic secular trend. We are still holding above the breakout level, and as long as we continue to hold above that breakout level, I think we want to be overweight U.S. equities. The structure of your portfolio weightings should change based on what's going on under the hood, as far as I'm concerned. We talked about it a little bit last week. I continue to like growth over value, and I continue to like large over small. That's kind of the 30,000-foot view if we think about it in terms of we're in an uptrend. Well, where do we want to be at a high level? We want to be in growth. We want to be in large cap. Your market in a minute. Every day, PowerFeed subscribers, I'll give you the kind of the 5 bullet points that I'm talking about with Chaikin Analytics clients and the key highlights from my note this morning. Trade tensions weighed on equities yesterday, but markets are rebounding here this morning. President Trump did announce tariffs on $200 billion of Chinese imports. It's a 10% tariff scheduled to go into effect next week and potentially escalate to a 25% tariff at the start of the new year. Small caps underperform and defensive groups lead. Industrials trying to form a relative bottom. We'll take a look at that. What's interesting to me is industrials from a power bar perspective have actually moved into the number 3 slot of the 11 key sectors. Futures, as I said, do point to a higher open. Not much really changing here from a power bar perspective for the major indices. 7-2 in favor of the bulls for the Dow. A little bit of an uptick, actually, for the S&P yesterday, 113 to 162. NASDAQ deteriorated. Look at the underperformance on the NASDAQ. They really came for the growth and momentum stocks yesterday. I think that move is counter-trend in nature, but no denying the fact that the NASDAQ was off nearly 1.5%. And there's your small cap underperformance, down over 1%, with the S&P 500 down 50 basis points. And the power bar ratio for small caps continues to deteriorate, down to 359 bullish or very bullish stocks, 321 bearish or very bearish stocks. Bonds pretty much unchanged, with the 10-year yield, as we said, hovering around 3%. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain somewhat bullish, and the major markets are mixed. Every day, PowerFeed subscribers will send you a stock of the day. It's auto-generated based off of our proprietary Power Gauge rating, and today's stock is American Home 4R, real estate stock. Real estate, it's kind of trying to form a relative bottom. It's Tuesday. It's relative strength day, relative performance day in my note to Chaikin Analytics members, and I'm looking for real estate to carve out that relative bottom, although in fairness, I've been looking for it for a little bit of a while. It's been an inline performer, but select stocks have done well, such as this one. AMH, very bullish stock due to very strong earnings performance, very positive expert activity, attractive financial metrics, and strong price volume activity. Closed at 2287, up 1.69%. So massive outperformance yesterday. And I have to tell you, I think the setup here still looks good. It's a very bullish stock with a strong trend and a strong industry. We're fishing in the right pond. Ribbon at the bottom of the screen tells us where this power gauge has been. You can see we're on that very bullish rating, and the market and the model are in agreement as the stock has been outperforming the SPY since June. However, it's currently oversold, and money flow for the most part throughout since February has been bullish, and you can see the intensity of bullish money flow has been much more than the intensity of bearish money flow. So we'll give the benefit of the doubt to the bulls here. Stock above a rising long-term trend line as it pulled back to test support at the lower volatility band, and it triggered not one but two of our proprietary signals today: relative strength buy signal and a relative strength breakout signal. I cannot argue with adding ticker symbol AMH to the portfolio in the here and now. If you're looking for real estate stocks to buy, I think this is one that you want to own. Support at $22, uptrend intact, AMH on the long side. We like it here. Sector tracker, looking at movement over the last 5 days. You can see the strength we've had in energy. I think that rally is counter trend in nature. Energy remains a weak sector, and both of the main industry groups within it are underperforming the market. Industrials have been doing well, and that's in the face of trade rhetoric. The market's discounted the trade rhetoric at this point, folks. I think any sell-offs related to trade rhetoric or trade tensions are buying opportunities. The fact that the industrials are up nearly 1.5% over the past 5 days tells you that. Materials, little counter trend bounce as well. Staples and real estate seeing a bid and a little bit of a flight to safety. I think the trend in staples is counter trend in nature. Tech, middle of the road. Discretionary financials have been your laggards. I think that, when I looked at my work this morning, not a ton has changed from a relative trend perspective. I think the recent strength in staples is counter trend. I think the recent sideways activity in technology is a pause as it got a little bit ahead of itself, and it's likely to resume to the upside. Our industry in focus today, transportation services. Over the past 6 months, subsectors outperformed the S&P by 37 basis points, really an inline performer. But the power bar ratio, which measures future potential, is very strong, with more bullish than bearish stocks, and it's currently ranked number 4 of the 21 subsectors that we look at, and it's moved up 1 slot over the past week. FedEx, Forward Air, and Echo Global are some of the indicative names there. FedEx and Forward have very bullish ratings. Echo has a bullish rating. FedEx did report earnings last night. Stock trading down small in the pre-market. Transportation is part of this industrials group that's doing well, even in the face of tariff talk. Industrial is actually the number 3 sector that we look at from a power bar perspective. I wanted to take a look at Echo Global here. Bullish rated stock, strong trend. Industry is weak but strengthening, as we said. This is a really good looking stock in a solid uptrend, outperforming the market. Dynamic duo in gear, market and model in agreement. Really bullish money flow here. Really the only knock is we need to work off this overbought condition. The ideal situation here is for Echo to go sideways in this 32 to 34 area in this support zone, become oversold, and then trigger a buy signal, or you can get involved when it becomes oversold. I think you want to put Echo on a bullish watch list, but I don't think it makes sense to pull the trigger on Echo in the here and now. I'm adding it to one of my bullish watch lists. I've been kind of bulled up on transports. I think they're emerging as leadership within this market. Echo is one that I'll be keeping an eye on for our clients. Yesterday's S&P 500 movers and shakers, MOS, M-O-S, Mosaic gains nearly 4%. NI, bearish stock up nearly 4%. We're going to want to take a look at that one and see if there's an opportunity to take the trend to the other side. Kroger, KR, neutral stock up 3.74%. Express Scripts, Cigna and Express Scripts get regulatory approval to go through with their merger. Express Scripts is a very bullish stock, going to be bought by Cigna. It's up nearly 4%. I actually think the way you want to play this one, though, is through Cigna, ticker symbol CI. We talked about it a couple of weeks ago, and stock is starting to work. We highlighted it as a name to consider within the healthcare services Group as a laggard that was likely to play catch up. That thesis is playing out. Cody rounds out the top 5 up 3.36%. But what I will say is that from a momentum perspective, Cody is, I checked it on this morning, actually. It's one of the worst performers within the consumer staples group. On the loser side, Abiomed, former high flyer, now has a very bearish rating and has been underperforming of late. I think you want to utilize strength in that stock to get it out of the portfolio if you have not done so already. Twitter continues to bleed out, down 4%. Netflix is a name that we highlighted a couple weeks ago as a bearish idea, and that trade is starting to play out. CHRW bucking the strength in transports. And Microchip, one of the key names in the semiconductors group. Semi's on the verge of a breakdown relative to the markets. It's one of the worst industry groups from a power bar perspective. I'm really concerned about the semiconductors here. A lot of the names in the group have become oversold of late, but the weakness there concerns me. I think we want to avoid semis, and when the names become overbought, probably look for some ripe ones as short sale opportunities. Our earnings update, yesterday's surprises. FedEx missed by 32 cents. That stock is trading off in the pre-market. Oracle beat by a penny. Remember, we talked about Oracle a little bit yesterday, and I just said, look, I think they have a tendency to trade off following earnings, and that is, in fact, playing out. Oracle is trading off here this morning. Before the market opened, AutoZone is announced earnings. Bullish rated stock. I believe that stock is trading lower, however. Let's look for an opportunity to get involved there because of these auto parts retailers have been acting pretty well of late. I think it's an interesting spot. Yes, that stock is off 5% in the pre-market. And we're going to hear from General Mills, GIS, neutrally rated stock before the market opens. Earnings calendar, aside from that, does remain light. I think all eyes are going to be on Micron on Thursday. So let's get into what we're talking about here today. You've seen this chart a bunch of times, but I can't reiterate enough the importance of it. Small caps are on the verge of a breakdown on a relative basis, right? We've seen it fail to get through this resistance level, and now we're about to take out support or taking out price-based support for the ratio, and we've got a sideways 200-day moving average, and that's important because when you think about it, a rising 200-day moving average is more likely to provide support than a flat or declining 200-day moving average. So I am concerned about small caps, just as I'm concerned about semis and their relative performance. And we can see here now, the small cap uptrend from a long-term perspective remains in place. However, I mean, we did mark a lower high here. So it's something that we're keeping an eye on. You've seen the power bar ratio continue to deteriorate over the past few weeks. This lines up with our view from a strategic standpoint that we favor large over small. This is the work that I'm doing. This is when I pick a stock every day for our clients. This is the type of work that informs my decisions on which stocks I think are bullish and bearish, right? My bullish ideas are going to be skewed towards large cap, and this ratio and its potential breakdown are a big reason why that is the case. Industrials trying to form a relative bottom. Here I have the XLI relative to the SPY, the industrial sector ETF relative to the S&P 500 ETF. We are still below the 200-day moving average. There's no denying that, but we are starting to carve out a series of higher lows, and we're on the verge of actually making a higher high. The RSI of the ratio has shifted into bullish ranges, and here's the XLI on an absolute basis. As I said, it's now the number 3 sector from a power bar perspective, and one of the real sources of strength there. We've talked about transports coming on, but check out the aerospace and defense group. This group is in a strong uptrend. I am not going to deny the fact that it is overbought here in the near term. I'm using it for illustrative purposes. This is the XAR, the SP Aerospace and Defense ETF. Solid uptrend above the rising 200-day moving average. Solidly bullish momentum with the RSI in bullish ranges. And look at Chaikin money flow here. Very bullish. I think you want to utilize a pullback if you're an ETF trader. Maybe catch a pullback towards the 96, 97 area to buy some XAR, or let's go looking for the strongest names within that industry group. So as always, if you're enjoying what you're getting here, if you find PowerFeed TV valuable, spread the word. Share our link on social media. It always helps. I think there's some good, profitable, powerful stock ideas and more. If you haven't already signed up, head over to ChaikinAnalytics.com and sign up for PowerFeed TV. Have a good day, everyone.